Okay, it's Brant from tradeguild.blogspot.com, and I have Archer Daniels Midland up on the chart, ADM. And basically, I've been watching this one for a couple months develop, and I was kind of wondering what it was going to do. I had a suspicion that it was going to break down, but the reason I bring it to you is, just take a look at what's gone on here. We have this big base back here in '03, and the rally that got kicked off here just after the Iraq War started. And this is just really, built another base over in here, went up, a little base over here, up. And that tells me, just looking at that this is not a continuation pattern. These triangles work in several different fashions. They can be continuation patterns, they can be reversal patterns, they can be tops or bottoms. It just depends on where they fall and how they develop. And usually the bigger the triangle, most triangles aren't as big as this one, the more significant they are. Usually 1 to 3 months is how they develop. Here we're looking at 1, 2, 3, 4, 5 months here. So it is acting as a significant top. So I've showed you a lot of like SLXA, where the triangle is acting as a bottom, as a base. Here's one acting as a top, and it almost looks like somebody broke off the tip of it and just poured price out. It just has just fallen out. One of the things they say too is that a good, reliable, decent triangle will break out 2/3 to possibly 3/4 of the way to forming that apex. And the further out they go, the less desirable they are. I don't know. I've seen some beautiful ones break at the apex, and I'm not sure. I haven't done the statistical averaging on that, but anyway, I don't know if you want to trade it. ADM, money streams falling apart here. TSV's falling apart throughout this triangle. If you want to trade ADM, I guess you wait for a little bit more of a pullback. Maybe it doesn't go too much more. Maybe you start adding in here, ideally up around 39, 39.50. But anyway, I just want to show you, the triangle functioning as a top. Next up is BTU. And this is Peabody Energy, and this is one that I came up with about 3 o'clock last night, flipping through metals and mining charts. And let me get a different chart so you can kind of make a little more sense of this. Here's a big uptrend line you can see in effect over here, and here is a head and shoulders top kind of pattern that you can see effect in here. And you see when this trend line was broken over here, that the trend line acted as resistance for this little right shoulder of that head and shoulders pattern. Anyway, it came to this neckline, it broke down on big volume, and I think potentially there may be a trade here. You could take it right now where it sits, or try to get it up a little bit closer to 39.40, see if it rallies this week. It may very well do that, so keep an eye on BTU for the short sale. Next up is IMO, and this is oil. So we've been saying that oil is in trouble when that trend line broke. So here it is. IMO, you can see the trade here. If I back out a little bit, the trend line is holding here, here, here. A failure there, and a rally back up. You can see the volume, the negative volume associated with that breakdown, and I think it's probably a trade right here, a little bit above 34, certainly, with a stop probably above 35, above that 200-day moving average. Let's take a look at the accumulation indicators. You can see this thing has just been headed for trouble for a while. Very divergent, with money stream heading down, price heading up. A very ugly chart, and it was just a matter of time. But we could have seen this divergence way back here. That still wouldn't have made it a great trade, because it still went higher. So divergences can play out over a long period of time, but eventually they will be fulfilled. And that's why I was saying, the chart pattern suggests what's going to happen, and there's a high degree of probability, but there's a low degree of probability of nailing the time and place. One other thing I want to point out real quick is this top over here as it kind of rounds over. Look what happens with the volume, and this is kind of indicative of a lot of tops that we see. Volume on the rally up, and they kind of fall short over here, and they pick up on the downside. So there's a little rounding top. Put it in your technical analysis toolkit there. Next up is FTI, and I'm only going to do so many of these because they all start to look the same. But there again is a support level that we can see here. I don't know if I'd call this a head and shoulders top. There's a support level that's been broken on volume. You can see volume precedes price. Look at these big nasty days, and look how TSV has moved down, and look how MACD didn't confirm this top over here. Look how the 22-day moving average crossed below the 50. Look how the 50-day moving average has turned down. Lots of warning signs here. So if you are astute and you've got your eyes wide open, you're looking at charts, this one would jump out at you. You don't need all these indicators that show you, oh, there's huge selling and TSV's crossed below the zero line. That's fluff. It's great. I love it. It helps me confirm trades or make decisions. But ultimately, everything you need to know is right there with the price and the volume. So let's move on to another one. I'm just going to go until this video runs out here. There's a symmetrical triangle functioning as a top. Volume over here is just horrible, and it's just kind of tried to consolidate into that triangle, and you can see it's fallen out of the triangle right here on some volume. This is a short right here right now, maybe a stop above this 50-day moving average around 1475 or so, and metals and mining, steel and iron, lots of downside still. We have time for a couple more. Here's MDG, and MDG is meridian gold, so this is gold. Okay, here's a descending triangle functioning as a top. Descending triangles have a bearish implication. They can break out to the upside occasionally, but they have a bearish implication. One of the interesting things here was that we saw a head fake over here. We saw the longs get trapped. This is what I've been talking about with triangles like SLXA. We saw the breakout to the bottom, and then it moved back up. Here is one that is heading down, and it has broken out to the top and headed back down. So descending triangle. There's the big volume. It's in a very shortable position right here around 25.50. Maybe you have a stop, I don't know, 26.50, 27. It's up to you. You just decide how much risk you want to tolerate, how long you want to wait for it to work out. I'm a fan of giving it a little more room, a little more time, maybe taking a smaller position in the stock. So let's take a look at, let's take a look at TRE. I want to show you this one before we run out of time. There's that symmetrical triangle functioning as a top, and you can see we have 1, 2, 3, almost 4 points of contact on the top and 2 points of contact on the bottom. That in its very self suggests bearish implications, and I think this is kind of a cool looking chart. Like I said earlier, break off the nose cone of that apex and it just spills right out the price. There's one that broke out toward the apex a little bit early. Look at the volume that's associated with that. I'm not sure that this one comes back, but this is in, it shows you what's kind of going on with the gold sector. It's just falling apart. I mean, just horrible. There's Money Stream, BOP, TSV down there. Pretty ugly. I have time maybe for one more. We'll just quickly look at SSL, just so you can see it. Another head and shoulders formation there. Another breakdown on heavy volume and a rally back into the neckline. So SSL, put that on your radar too. And that will do it for tonight. I will see you soon.